Hello, welcome back. Zoya podcast producer here. This week, we're joined by Floodbase, a company at the forefront of using satellite data and advanced analytics to provide real-time flood mapping and support parametric flood insurance solutions. Joining Matthew this week is Emmalina, who leads public sector partnerships at Floodbase, and Alex from Amwins, a leading global specialty insurance broker. Amwins and Floodbase have partnered earlier this year to unveil their Tees to Greens flood insurance for US golf courses, and in October unveiled their flood insurance program for California municipalities. If you're curious about how satellite observations and parametric insurance are reshaping flood risk management, this episode is for you. Now let's dive into the conversation.
Alex, Emmalina, great to have you joining us today. It's another global podcast. So, Alex, I think you are in California, and Emmalina, you are in Lithuania. So just a bit of an overview first of all. So Floodbase, you are providing data to support parametric flood insurance globally. Our company was founded back in 2015. We've been delighted to have your support as an Instead member. And you're using satellite observations along with hydrological and meteorological data to create near real-time flood maps. Alex, you're from Amwins, as many people know, leading global specialty insurance broker, and you're offering tailored solutions across various industries and risk specialities. Alex, you're Executive Vice President for Alternative Risk at Amwins, and Emmalina, you are responsible for public sector partnerships at Floodbase. Great. So, Alex, you're helping your clients, both private companies and public sector, get cover for flood. We know that flood not only is it evolving risk, but it has a lot of challenges for insurers. What are the kind of examples that you're trying to help your clients with just now?
Yeah, well, I think we all know that flood is likely the most underinsured peril on a global basis. You have lots of, exposures that are just completely underinsured or uninsured entirely. And those uninsured losses fall on the back of society lots of different ways, whether that be the public sector or the private sector, individuals, communities. And even recently, you see with Hurricane Helene and Milton, pretty sizable flood losses, and dealing and hearing stories about some of the claim scenarios where people are not getting the response, the coverages were not as robust as they had anticipated, or it wouldn't have responded at all, and that leaves them having to make really challenging decisions post-event.
For those that are not familiar with that, do you mind just sort of explaining a little bit about how that works and some of the sort of gaps that tends to leave people get impacted by floods?
Sure. Well, you've got both residential coverages and you have commercial coverages, and specifically in the context of commercial coverages, right? The most amount of coverage you can get on a commercial policy is $500,000, right? And that's also going to have some limitations to it, right? They're going to be able to write in, most places. However, they're not going to be able to cover all things. For example, assets that are underground or, high value assets that may be on ground level. And so while it is intended to respond where maybe traditional insurance is uncomfortable underwriting, so that's an important backstop that it creates, there's still substantial challenges with the coverages. So you have a lot of obviously commercial actors that end up buying policies excess of the NFIP coverage to help stand in for those larger scale events. But again, there's a lot of things that are going to slip through the cracks.
And to your point there about, you mentioned passing about traditional insurance is not willing to provide the coverage, but the NFIP is also not suitable. So parametric, I think we've increasingly seen parametric has got the ability to provide a solution where the traditional markets haven't done. But what is it specifically about the characteristics of parametric insurance, and I guess what Floodbase is doing, that is finding a way to profitably provide cover for flood-exposed companies and public sector organizations?
Broadly about parametric insurance, right? It's roughly, call it 30 years old. And I think a lot of entities are now quite familiar with what it is. They may have not yet figured out how to employ it into their risk management strategies, but it's obviously quite different than traditional insurance, regardless of what peril we're talking about. But the key attributes of parametric insurance are going to be speed of payment, because the data is available in real time. There's no ambiguity in a parametric contract. We know exactly what this thing is going to do when the trigger is breached. And the second key benefit, and arguably the most important, is the flexibility in the use of proceeds, right? You're indemnifying the insured, not the underlying asset specifically. So the insured can use it to recover from that triggering event however they see fit. So those are really powerful tools when you think about, the chief complaints about insurance is that it's too ambiguous and too slow. And so parametric does a decent job of righting the ship in terms of its responsiveness and its flexibility. Now, specifically to flood has always been an incredibly challenging peril because it can manifest itself in so many different ways, right? Whether it comes from the sky, from the ocean, from the river. And each one of those sort of sub perils, as we probably refer to it, has a different data set, right? And so you have to kind of pick your poison or select the way in which you think you might suffer. And so that's what I found so compelling about the flood-based technology, is because it's agnostic to where the water comes from. It's just the measuring of the presence of water where it's not supposed to be. And so I think the application of that is quite broad. I think it's going to be really helpful in addressing a lot of things that I mentioned before in terms of uninsurable exposures for a lot of these entities that can't find appropriate coverage.
We'll come back and talk a bit more about some examples in a minute. But Emmalina, if you can talk a little bit about how Floodbase is providing the analytics. Alex has said he's impressed by what you're seeing, but what does that mean in practice in terms of the technology you've got, the expertise you've got, and how does that support robust parametric structures?
Yeah, as Alex said, measuring flooding consistently and reliably over large domains has been a huge challenge in this industry, even if it's a young industry compared to other perils that are commonly found in parametric products. So really what Floodbase has over the years built and focused our technology on is how to structure these new types of risk transfer products by providing that kind of key information, that continuous flood monitoring data on a global scale. So in the US, our data is hourly and goes back 45 years, which importantly, for us and our underwriting partners helps us price and monitor using the same data source, which I think for flooding can be very difficult to do. And our flood index is based on actual observed and validated data. So we've actually trained this model to predict surface water extents based on direct satellite observations, as well as near real-time inputs from both National Water Model, near real-time stream gauges, and other types of inputs. And so what we do is we are measuring the area of flooding, as Alex mentioned, usually kind of in square kilometers or percentage flooded within each boundary covered by floodwater. So anything, as Alex said, where water is not supposed to be outside of permanent water bodies. And that effectively captures the flood's magnitude. And when we go back in that 45-year history, we can then define and backtest different payout thresholds that are unique to the geographies observed flood history in those specific areas. And what that also allows us to do is that we can actually work across various boundary types when we're designing products. So we can look at parcel boundaries, we can look at portfolios of assets across a state, for example, or look at city and county boundaries. And I think that going back to kind of the issue of what traditional flood insurance has been solving today, it really enables us to build products in sectors that didn't have that type of comprehensive coverage before, whether that's golf courses, resorts, the agriculture sector, or with public entities.
And so the golf courses, just come back to you, because this was where the two of you worked together, first of all. We can sort of visualize a golf course. It's a large area. It's pretty difficult to get traditional insurance in the way you would do the property. But can you just talk a little bit about why that worked for you and worked for your clients? Then how did that in turn give you the confidence that you could apply this to municipalities and public sector?
It might have seemed like an odd place to start, but you think about the fact that there's more than 14,000 golf courses across the United States. They're almost always going to be built adjacent to some body of water, right? The ocean, a river, a lake, what have you. And the topography of a course is always incredibly variant, right? There's nothing more boring than a completely flat golf course. So you have, lots of slope, and measuring water across an area like that can be very challenging. And then you put on top of that the fact that there is limited to no flood coverage for golf courses to be had in the market for all the reasons that I just listed. And so it seemed an appropriate place to start for those, country clubs or golf courses. That the course itself is its most valuable asset, and they can buy flood coverage for the buildings, and there are other lines of coverage, and they can get some what we refer to as tees to greens coverage, where you can cover parts of the course. Invariably, the flood exposure is going to be non-existent to very harshly sublimited, and so again, you have a wind event come through or a hail event come through, and you can clear out a handful of downed trees in a couple of hours, but you have an inch or more of water on the course, and not only are you losing rounds of golf, greens fees and things of that sort, but you're also having to replace bunkers and replace turf, et cetera. So it can be incredibly costly for them, and they're all over the country and all over the world, so it seemed an appropriate place to start.
And in terms of like the coverage, we just talking a sort of handful of golf courses, or did you mention there about the number you've got around the country? Were you sort of looking at this in different locations?
Yeah, so it's nationwide. We're looking at courses everywhere from the Pacific Northwest to Florida and beyond. And it can be individual one-off courses, or it can be large consortiums of golf management companies that have dozens of courses across the states.
And of course, public sector municipalities, is even bigger. So how are you sort of seeing that crossover from the golf courses? What you've learned there, and what are you now offering to your clients in that sector?
Well, for all intents and purposes, the solution itself is identical. The need is different, but the idea of the structure and the mechanics behind it are exactly the same, right? You are drawing a boundary. In this particular case, municipalities were taking the jurisdictional boundaries of that locality, and they are then detecting or modeling the amount of permanent water within that space, right? Rivers, lakes, reservoirs, etc., to determine the amount of area that has water on it on any normal day. And then effectively what they're doing is measuring deviations from that normal. And again, from the public sector's perspective, right, they don't care where the water went necessarily. They don't care how deep it was. They just care about the fact that there was water where it wasn't supposed to be. And so they may be concerned about their municipal owned properties, but the argument that I often make is the municipal owned assets are, generally speaking, the least valuable economic asset within that jurisdiction, right? It's the community that they support. It's the commercial actors. It's the residential subdivisions. These are all taxpayers. They are the economic engine of those places. And they're the ones that generate all the revenue for those jurisdictions to take on new capital projects to create progress. So protecting those tax bases, I think, is incredibly important, particularly when you juxtapose it against the fact that the federal government, FEMA, and specifically under the Stafford Act, right, the law that dictates how the federal government will respond to these disasters, is explicitly written into the statute that they will not cover a single dollar of lost revenue. And with traditional insurance, they may offer business interruption protection, but it will only be tied to physical damage to the insured properties, right? So if the public library floods or the city hall floods, right, that's obviously a challenge that they have to address. FEMA will support them. Traditional insurance will support them. But if you've lost an entire business, downtown corridor for weeks on end, that creates massive disruption. And of course, those revenues are the underpinning of all their capital obligations. So life gets really challenging financially when you have these uninsured events.
So Emmalina, quite a challenge there. What are you doing specifically with how you're structuring the parametric coverage, and or certainly structuring the input, the parametric coverage to be able to help address the issues Alex just referred to?
Yeah, absolutely. Well, first, just want to echo, we support FEMA currently much more sort of on the disaster response side than building parametric products with them. But it's really highlighted for us some of these real tensions around also the points Alex made about access to federal funding post-disaster for localities, the fact that it can take a lot of time for those funds to show up, and they're not always guaranteed. There are these sort of applications that are denied, especially as we see these risks growing in new areas. And we saw this exactly play out in the 2022 to 2023 atmospheric rivers, when the majority of federal funds took quite a long time and had delayed delivery to these localities. So for us, the program really serves to be a solution that can free up flexible capital for localities to deploy without this sort of reliance on sluggish federal funding streams, giving them more autonomy on how they respond, whether it's to support with infrastructure or the actual communities themselves. So when we're designing this cover, we're actually drawing the boundary around the full jurisdictions. And now cities and counties can rapidly react and fund sort of an expanded set of activities that is importantly, completely up to the government's discretion. So kind of a few examples that I want to bring up where this product can support specifically. The first is, aspects that might be found in traditional coverage, right? So rebuilding critical infrastructure, your bridges, your utility stations, your treatment plants, et cetera, but can also serve to support vulnerable communities by securing that kind of first dollar cover that could feed into existing disaster programming. And one example of an existing vehicle in California that could benefit from this, just to kind of anchor this somewhere, is the San Diego Flood Response Fund, which was recently created because of the atmospheric rivers. It pools capital that ultimately gets distributed through community nonprofit partners to just kind of provide disaster relief services to communities, but right now is purely reliant on donor funds. And so this could be an area where, through a parametric policy, that immediate payout could serve into an existing disaster relief program at the local level. And I think, to the point that Alex made, the kind of third example that I think is sort of the most unique and necessary that there's no coverage for today is this idea that the funds could really help directly cover any lost tax revenue that is caused by a disruptive event. And whether that's, sales taxes from drops in tourism to property tax reduction due to damages on physical assets, or even just the income tax kind of decreases that might happen because of affected small businesses. It's really important that cities can recuperate those lost costs and, improve kind of impacts to their overall budget, and also even could impact their overall credit rating. So another example of this was in 2017, the atmospheric rivers, specifically in San Jose in Northern California, caused the Coyote Creek to overflow pretty massively, which impacted a pretty big commercial economic zone and caused reductions in sales tax that year that were quite significant. So it could directly go back into helping with sort of the budget recuperation that's needed at a local level. And then some localities have specific mandates to purchase coverage, whether it's, government enforced or lender enforced. And by purchasing through this new program we've co-developed, they can kind of meet those obligations, but actually expand the deployment of the capital from that payout to really anywhere in the city, and really expand how they use those funds, but also check off that list that they have coverage.
Thanks, Emmalina. That's really helpful. Just come back to Alex in a minute just to see how your clients or prospective clients respond to this. But we've used the term atmospheric river quite a lot for this. That I think those people living in California have experienced that directly. But could you just explain what, for a sort of non-technical audience or people aren't familiar with that, what an atmospheric river actually is?
Yeah, I mean, I'll give you, since I'm a non-technical person, I'll give you my non-technical answer. It's effectively a low pressure system that comes in off the Pacific. My understanding is that the interaction with the topography, the mountain ranges, it carries a tremendous amount of water. I think the 2023 event I had read based on NOAA data that it carried 15 times the amount of water as the Mississippi River. So we're talking trillions of gallons of water being dumped over a certain area over a very, relatively confined period of time. In 2023, I think there was a state of emergency in 51 out of 54 counties in California, I believe is the number. And so it even impacted us down here in the desert and created flooding across the state. They generally happen, from my understanding, basically from November through March is really the season in which they can occur. And that is my non-technical answer to that question.
So very impressive. Emmalina, how did Alex get on there? It seemed like he knows a lot to me.
No, he hit the nail right on the head. That's exactly how they operate. And I think the concern we have is that the data is showing, there was a recent Nature paper that we're expected to see severity double in the next century in terms of how severe these atmospheric rivers really are, how much water they're dumping into communities in these kind of short amounts of time. And we've already seen just over the past few seasons, winter seasons, how infrastructure is really not kept up with sort of the intensity of these events. We saw that also, just a few weeks ago that the seasons officially started in California. So places like Sonoma County got, in some places, 20 plus inches of rain dumped at once, which left kind of many communities, hundreds, stranded. So we're already starting to see what it looks like this year. In the past few years alone have been more extreme than those in the past.
Yeah, you get a lot of hazards in California, wildfire, earthquakes, and now you've got atmospheric rivers dumping on you as well. Alex, given that parametric looks like it's such a good fit for your clients that are struggling to get insurance anywhere, or particularly the municipal ones. How are you finding they're responding to when you talk to them about this opportunity?
I think generally quite positive. I think they very quickly understand the value proposition, the differentiating value it has with, let's say, the traditional coverages that they either voluntarily or mandatorily purchase. Obviously, with the public sector, always the biggest challenge is going to be budgets. And, they have a finite amount of capital that can be deployed for various budget line items. And so understanding whether they make changes to their existing insurance purchase or they end up identifying other sources of capital to fund this. Emmalina mentioned that fund in San Diego, but you may see municipalities say, we're actually going to take a certain amount of funding out of, let's say, the public safety budget or the emergency management budget to help support this insurance purchase. Why? Because it's not just about recovering an asset, it's about recovering the community, and that's our job. So let's figure out how we're going to reallocate some of that capital across different budget line items to create a more holistic response to these events.
And there's always needs to be two sides or two people on each side of a transaction for insurance. I mean, are you finding a pretty good match between what people would expect to get paid to provide the capacity or the cover and what your clients are willing to pay?
Generally, yes, right. I mean, the beauty of a parametric structure is you can effectively make it cost however much you want it to be by either modifying the aggregate limit that you're deploying or by modifying the trigger. And obviously, again, not unique to this structure, but all parametric structures for the most part, is the ability to back test it. You can see exactly how this thing would have performed over the last 45 years had it been in place for all those years. And so we've had cases where we've had golf courses say, from Hurricane Hillary last year, we had $300,000 worth of loss. Great. That's a really helpful data point for us to help benchmark the trigger design so that if another event like that were to happen again, they would have been compensated exactly $300,000. And again, we can tell them to the penny how this would have responded. So you can either say, geez, I want to buy more, or I wish I had more coverage if that event were to occur, that losses were magnitude larger, or we don't have the budget. How do we modify this? And so you don't try to boil the ocean and buy, a ton of capacity in the parametric space, although you theoretically could. My argument oftentimes is, buy a smaller limit and buy a more responsive cover because it's still a first dollar cover. You haven't changed the value proposition at all by decreasing the amount that you're purchasing. So add this into the mix of the things that you use to respond to events and see how it works and modify it and grow it over time.
So, Alex has talked about the structure of the coverage. Can you relate that to what are the physical conditions or what initiates the trigger that causes a payout for the parametric cover?
Yeah, so I alluded to a little bit earlier, but basically we're starting with a boundary. So we're typically drawing them, in this case for the public sector program, around municipal borders. In some cases, we could look at special districts or entire counties. And what we do is then we kind of map the presence of floodwater in those boundaries. We map the 45-year record. We look at sort of the annual maximum floods. We calibrate it with historical events. If they have lost data, it's really helpful. And like Alex said, we can really calibrate to different return periods. We can backtest. We can use other loss data and actually say, if you pay this premium with this limit for this major event you saw 3 years ago during an atmospheric river, this would be that sort of expected payout. And I think that piece of information is really helpful for clients to think through. Would that actually meet kind of the needs that I intend for my community or kind of the losses that I faced? And we can really iterate quite quickly based on these different variables. So again, the technology is the same as it is for the golf courses, right? We're looking at if the water meets that sort of pre-agreed amount in terms of overall flooded area, and the payout will be made instantly.
Well, it's a fascinating topic, and people talk a lot about the insurance gap, and this is clearly one area that
I'm super encouraged. I mean, I've worked almost exclusively in the parametric space for almost 15 years, so half the life, I say, of the parametric space. And I'm always really encouraged when I see new developments in areas that are going to advance the space. I think the confluence of the digitization of data, the computational power of the industry, and just technology writ large coming together are going to bring forward new solutions that we can't even envision today. And so this is kind of one of those things where we're pulling together a really unique data technology driven approach, combining it with an emerging climate risk that people are becoming more and more aware of. And specifically addressing, to your point, a gap in coverage. To me, that is incredibly exciting to be able to bring these new solutions forward and hope that the insurance industry can evolve in its solution development as quickly as risk is evolving.
And Alex, for you, if there's anybody out there that wants to get help with these covers and looking for an organization like yourselves to help them, how should they get hold of you or somebody in Amwins?
Yeah, email's great. I'm sure we can share that.
Yeah, well, we'll add your details in the LinkedIn details in the episode notes if anybody wants to know more. And then Emmalina, just anything else you want to add just to what we've already been talking about?
Yeah, I guess I think in regards specifically to California, the news around insurance hasn't been all that positive over the past few years. So for us, it's really exciting to be able to bring innovation and actually build new products that don't just replace old products, but actually expand coverage. I think that's a positive headline in an area that's having more difficulty in the traditional market. And so, yeah, I hope that message comes through. And I think the other piece I'd like to say is, a lot of times when people talk about public sector kind of community-based insurance models or public sector projects, they tend to be sort of these pilot efforts. And we're really excited about this being a program that really stands on its own. And we're hoping to scale quite widely across the state and then potentially to other areas of the country. So, yeah.
Yeah, I mean, companies are often asked about their addressable market, and you've got a massive addressable market in terms of flood risk, not starting in the US and then expand to the rest of the world. And then anybody who wants to know more about Floodbase, where's the best place to go and look for information?
Yeah, I'd say on our website or our LinkedIn page, follow us. We're pretty active with updates. Don't be a stranger.
Excellent. Well, we'll also put the details, of course, in the episode notes. Emmalina, Alex, that was fascinating. Learned a lot there. Thank you very much. And I'll let you both get on with your days.
Thank you so much. Appreciate the opportunity.
Thanks.
Well, if you've made it this far, then I'm pretty sure you found that as interesting as I did. If you haven't already heard, Exponential Risk London is a new 2-day conference hosted by Instech, dedicated to addressing the evolving needs of the global catastrophe and climate modelling community. Tickets are now on sale, and hopefully we'll see you in March. That's all from us this week. Goodbye.